We had a rally in the stock markets and we're going to have a new president starting from the next week. So let's talk about our portfolio, how it behaved. Ladies and gentlemen, welcome to Wealth Dawn. This is the weekend edition where we're going to do our portfolio review with what we bought, what we sold, and why we did it. Also at the end, as always, we're going to do a risk assessment and a little bit of prediction for the market, what it's going to do the next week. So let's first of all start off with our previous week prediction. You can find this on our blog. And also as soon as this video is done, you can also find it and find the next post on the blog as well. Links to that as always down in the video description. So last time we said that we had a MACD sell signal pretty hard in place here. We're talking about the week from 13th January to the 17th of January. So we said MACD was low, RSI was at 38, which was pretty low. We were bullish on these two signals. Then the S&P 100 or S&P 500 hit that 100-day mark right here. And we also took into consideration some negative aspects of no Santa Claus rally. First 5 days of the market were negative. Actually, that is not quite true because the very last day was slightly positive because they're trading days, and I messed up there. So the last thing that we took into consideration is that economic events could trigger a larger sell-off in the market, but they came in positive, so it didn't. So this is always a 50-50 chance. Now, we assessed the last week or this week that just ended with a 54% risk in the market, and I would say I was wrong-ish because the market did have a rally. So from the 13th here to the 17th, which was the last day where they triggered now the MACD buy signal, the market was positive, although it had one positive day, then a negative day, a positive day, a negative day, and then a really good positive day. So we are expecting some changes in the market to happen next week, but we're going to talk about this at the end of the video. Right now, we're going to talk about portfolio. Currently, we are at almost 160,000 euros, which let's just do a little conversion. 159, which is $163,000 with our portfolio. We had a slight increase from the last week. Market did rally, and our current yield for the entire year would be a 2.58%, which will return a 3,448 euros, which would be $3,552. Okay, so let's talk about what happened last week in the market and what we did with our portfolio. Let's start out with positions that we closed. So 3 positions we closed: Powell Industry, Alibaba, and Hims. Let's start with Powell Industry, ticker symbol POWL. Now, the main thing that is concerning me here with Powell Industry is we take a look at the 5-year range. It's pretty deviated from its fundamentals. And I would expect if there would be a retraction in the market in the upcoming months, that this will be hit hard. Remember that Powell Industry is actually a third order degree bet on AI. But if AI would be to crumble or even to shake its foundations, this is going to suffer massively. So this was always a trade for me. Sadly, I closed it up. Here's the closing price, so slightly under the buying price. There's not much to say about the fact that I already took gains, but this time it was a negative trade for me. That's it. I'm going to accept my losses. Also going to release a video on gardening your portfolio. Definitely watch out for that one. Remember to subscribe to the channel and click that notification bell in order to get notified whenever I release a new video. So main concerns for Powell Industries is that when this is going to reverse, and I don't know when this is going to happen, then this is going to hit me extremely hard, and I want to mitigate risk. For now, Powell Industry is in a buying signal. I don't know how long this is going to last. It is not overbought, so this could really go up there and get me some good returns, but I don't know. Also, there's the presidential inauguration next week, and I'm kind of for that. That's also the reason why I sold Alibaba, ticker symbol BABA. This one barely making some gains there, a couple of cents only. It also wasn't that big of a position for me, but what I want to see is how the inauguration works for Trump and also for the stock market. So if, God forbid, nobody assassinates the president, and to say a couple of good words then about China, and also let's see what happens with TikTok, because they have now a deadline, and if that deadline would be to be extended, I can see some positives for Alibaba. But for now, although it triggered the buy signal, it's trying to trigger here a buy signal, but we also had this kind of fakeouts, and then it went back again, then it went up again, and then it went back again, and we're in this limbo. So I want to see clear decision. What will happen between China and the US? And after that, Alibaba is a buy for me. Now, remember, this is not financial advice. You should all consult a financial advisor. This channel is only for me to express my thoughts and to entertain you. Are you not entertained? Okay, so that's it. Why I sold Alibaba. I was hoping for a much bigger bounce. It didn't happen. So I'm out of that position for now, but we're going to revisit that position later on. Now, let's go to the last one, which is Hims and Hers, ticker symbol HIMS. I took my profits here. here. Although it triggered a buy signal, I do not know how long this could last. It could last a very long time, and this could also explode. Remember, Hims is a growing company which has in the health sector a very good moat to the fact that they cater to client-specific purposes. So they're kind of trying to figure out what exactly you need, and that's what you're trying to get, instead of having standard solutions for each and every patient. Okay, so sold Hims completely. Took some profits there. You can see here there's 11.55% profits taken. So I would say that was a good trade for me. Last time I sold it with 40% profits, but right now I'm kind of scared of the market. Okay, so that's it for what I sold. Now I also reduced a couple of positions, a lot of positions here. So let's start with the first position that I reduced, but this is just a smidge. So ticker symbol CMG, that is Chipotle. I reduced Chipotle to 4.17% of my portfolio. I sold 3 shares. That's all I sold. Also, it was basically due to the fact that I needed just a tinge more cash for another product. We're going to come back to that after we're finished with my positions that I reduced. I'm going to come back which position I added to. So nothing wrong with Chipotle. Long-term, great company. They're bound to release earnings. Let's see, Q4 earnings on the 4th of February. So I'm definitely going to take an eye on that, and also going to report back to you with the earnings report what I think their outlook is, and so on and so on. So I'm going to do a review of their earnings report. Also doing a lot of reviews for all of the companies. Now let's go to the next company that I reduced a pinch, and that is GE Vernova, symbol GEV. So not GE, but GEV. I reduced it to 2.94% of my portfolio. Currently increasing gains. I'm up 30.16%. So let's just say 30% on that position. Just took a bit of profit. Remember gardening. And again, I'm going to release the video on how to garden your portfolio. Now, if you take a look here on the yearly scale, it's starting to get overbought. We have a massive buy signal triggered here in the MACD, and I think this is going to get overbought. It's going to have a pullback maybe, or going to have, just like here, a consolidation period. I don't know. The last time it did this was it rose in April. So it's not long ago that they're actually public with the company. Rose in April, March of 2024. Then it stabilized here from May to the end of August. Then we had a little bit of correction, and then it ripped till November. And since November, it's consolidating. So what is the future for GE Vernova? I think they have a very long way to go from here, but definitely I'm going to revisit this position if I will see it as being just too far out there. The next position that I reduced massively is UnitedHealt. It had a nice little bounce. I took some profits and then I actually added back to it. And currently I am with UnitedHealt, ticker symbol UNH, on a 2.8% position in my portfolio. Also in the red currently with 2.11%. Kind of had that pullback and I added to it, but then it had a little more pullback and then it jumped back again. So it's trying to trigger here a sell signal. I don't know what to say about UnitedHealt. It could jump back. This could happen. We could see something like this and go on for a couple of weeks, but it's trying to correct here for some reason or another. They don't have a CEO right now. They had their earnings report. It was a good earnings report. So let's just see what happens with UnitedHealt. Okay, next stock that I reduced my shares in is MercadoLibre, symbol MELI, MELI. I reduced it to 2.2% of my portfolio. I sold only 1 share, well, because 1 share is at current value 1,750 euros, which would be $1,803. So I reduced this position to the fact that let's just open up MELI. It's in a not overbought state, and also this is going to be impacted by the Trump trade with, let's see how hard will Paris impact Mexico and other countries that is outside out of US, because this is a completely outside of the US company. So it is registered on the NASDAQ. It does the ticker symbol for the NASDAQ, MELI. It will be impacted by tariffs. This is probably also why it's selling off. Now, if I'm going to have here a clear signal that this is going to take off, then I'm really prepared to add back to MELI. But for now, I took some profits and going to watch out for MELI. Also, I'm prepared to take even more profits if this goes up, and revisit this position maybe later on. The next stock that I took some profits from is Visa, ticker symbol V or Victory or Vendetta. We are currently at 1.56% of our portfolio. Actually, this should be a 2% position of my portfolio, but let's just take a look at Visa. So Visa, ticker symbol V, 1.55% of my portfolio. A current gain of 25.54% in my portfolio, and either it's consolidating here, let's see here, or it's going to correct, because Visa is so far away from its trading average. Open up a long-term chart here for Visa. So if I would take a 5-year position, let's just look at the green line is the 50-day moving average, the blue line is the 100-day moving average, and the red line is the 200-day moving average. Now, last time that Visa was this far away from its moving averages, well, it most certainly corrected to the 100-day moving average and then even back to its 200-day moving average, which would be a correction back to its 2021 top, or no, even well, somewhere there. So this would be a pretty massive correction in Visa. I have gains in Visa. I'm pretty bullish on the company for long term. Though let's see what the Trump presidency will, how it will affect Visa, because if they're trying to bring in some kind of alternative payment method, then it's going to impact Visa and MasterCard. If I don't know what they're going to do with Bitcoin, honestly. And this is not even a bullish case for Bitcoin. It's just a pretty bearish case for Visa for my part. So this is why I reduced my exposure in Visa. I'm still not massively, but I'm still invested and going to remain invested. Maybe I'm even going to take some more profits because they're just triggering a buy signal on a MACD level. Also on an other side, they're not overbought. Could even go higher and then correct. I don't know. The last company that I sadly took some profits, but I'm going to revisit this, is Brookfield Corporation. Although Brookfield, ticker symbol BM, I sold most of my position in Brookfield, leaving it just as I'm watching Brookfield. So I have a 0.01 position in my portfolio, which I usually don't do. The minimum requirements for a position is 1% in my portfolio. But I did invest that money somewhere else. Already looking good, let's just say. I'm positive about that position. Going to go to that just in a couple of minutes, but let's just talk about Brookfield. So Brookfield, which I still didn't do my big video that I'm promising, Brookfield has a bright future. At least that's what the CEO says and analysts say, and everybody says, but remember that price does matter. So buying Brookfield here at its all-time highs and expecting it to double, which I think the next couple of years, actually in the next 5 years, I will still wait for a bit of correction in Brookfield. So on a 1-year diagram, Brookfield is pretty much at its peak. Also on a 5-year and even on a all-time high, Brookfield is up there. And we can clearly see that it has potential for some correction. It's clearly overbought. It's clearly over its long-term moving averages, especially from its 100 and 200-day moving average. Let's take a look here at the 5-year diagram. Last time it did this, it did have a correction. Now, will this correction happen next week, next month, this year? I don't know. The probabilities are higher for happening than not happening. So I'm watching Brookfield. It is an exceptional company. I do want to add massively to this position, but not at this price. And maybe I'm wrong. Maybe it's going to take up from here and just go to the moon. Could be. But the probabilities for me at least are low that could happen. So that's it for reducing positions. Now let's see what we're added. As you can see, there's a couple of companies we're added. First of all, I raised my cash to a 3.19% of the portfolio, and I'm honestly looking forward for a 20% cash position in my portfolio in the upcoming months. So cash currently at 3.19% of my portfolio with a 3% on that cash. So if I hold it for 1 month, I'm going to get 3% divided by 12. The calculation here. So 3% divided by 12 is 0.25%. So this multiplied 5,000. Oops, it's 5,068. I'm going to get and divided with 100. 12 euros for 1 month. But for entire year, it would be obviously much more. So times 12, exactly as it says down here, 152 euros. But yeah, so that's pretty cool that in my brokerage account, I'm getting 3% on my cash position. This is why I'm also not afraid for holding cash. Now, let's go over the positions that I strengthened or added to. First of all, AbbVie, which is a research-based bio company. The recent dips, actually in the entire health systems, there are some questions about Medicare, Medicaid, and also in the U.S. economy, of course, and also what will the Trump presidency, how will it impact with RFK Jr. being one of the responsibles for the healthcare system. So there's a lot of questions here. But this being said, looking at the fundamentals, AbbVie is an exceptional company. It also yields a dividend of 3.78%. This is why I increased AbbVie, ticker symbol ABBV, to 5.03% of my portfolio. It's triggering here once again a sell signal. Let's see how far this goes. I'm also going to have some calculations where I'm going to take profits and maybe even invest more into AbbVie. That's it for AbbVie. I'm currently up 1.16%, so nothing. Next up is Eli Lilly, where I added once more. Here there's a clear sell signal being triggered. Also, if it's going to go down here in oversold, I'm considering to adding more to Eli Lilly, ticker symbol LLY, and I'm currently at a 4.79 9% of my portfolio with Eli Lilly, also one of the big players in the GLP-1 drugs, which is again being impacted by the Trump trade and its upcoming legislation for the healthcare system. Next, Adobe, ticker symbol ADBE, strengthened this position on its massive pullback here, clear oversold, and now it's triggering a MACD buy signal. So I strengthened Adobe to 3.94% of my portfolio, but I'm also going to say that this is only a trade for me. So I'm going to see how far can this go, and then I'm going to take my farewells once again from Adobe, because they're failing to, that's why probably it's as well as why most likely it's that much down, is because they're failing to deliver on the AI side. Now, other than that, great company, I would say. So what's this mode? Well, it's kind of the monopoly. That's its mode. Also, I think that's going to have another pullback when it's going to have a merger or will try to acquire Canva. So they already tried it once, and this is one positive of the Trump trade, that we could see some legislation changes on mergers and acquisitions. And maybe they're going to buy Canva, and I love Canva. And after they have bought it, the price most probably will fall, or on the news the price will fall, and after the revenue starts streaming in from Canva, the price will jump once more. But again, depending on at what price they're going to buy Canva, if it's going to happen, of course. Okay, let's move on to NOVO Nordisk, B position. So it's not the A position. NOVO Nordisk is massively being hit due to it's hit by two factors. One is that, again, this is the direct competitor to Eli Lilly, GLP-1 drugs, fat loss drugs, and fat loss. It's actually not just fat, because also bone marrow, bone density, muscle tissue when you're losing weight, so weight loss drugs, so higher weight, not only fat. So be careful there. NOVO Nordisk is most likely down, massively down. Two factors. One is it is not a US company, the Scandinavian company, I believe. Denmark. So yes, it is a Denmark-based company. It does almost the same thing as Eli Lilly, GLP-1 drugs, and also diabetes drugs. So major company, but it's impacted due to the fact that tariffs will impact it. We don't know how hard, speculation, but that's why the price is going down. And also healthcare system. So two major concerns about NOVO Nordisk, but I added to this position. NOVO Nordisk, ticker symbol NOVO_B. Now this is the B share. It's not that much different from the A share, and it's currently at 3.8% of my portfolio. Next up, I added to ORCL, ticker symbol ORCL, and increased this to 3.55% of my portfolio. ORCL had a massive pullback. That is where I reacted, and is now triggering a MACD buy signal. So it was on an RSI oversold, and it's probably also being impacted due to the fact that I didn't even realize this until this week. It's being impacted due to the fact that TikTok is using their servers as storage in the US. So if TikTok would be closed in the US, then they do not need Oracle's servers, and then their revenue would be impacted. Now, as I said, I think there is a trade to be made here with TikTok. You cannot buy TikTok. Also, it's owned by a company called ByteDance. You cannot buy TikTok on the stock market, but it has its effects on the market. And Oracle will benefit massively, or its revenue will be impacted massively from TikTok one way or another. Now, as I can see here, the Oracle is jumping back up again. I think that the market already knows what is going to happen with TikTok. So let's see and wait. I definitely added to this position. Also, it's a dividend yielding company. They are currently at 1% dividend yield. Already locked in those dividends because the X date was, so I said dividend, but the X date was on the 10th of January. So $0.4 a share. Okay, let's move on to the next one, which is I added a new position to the portfolio, and that is Procter and Gamble. And I massively added to this. I'm going to do a separate video on Procter and Gamble. Now, Procter and Gamble's ticker symbol PG, currently occupying a 5.51% of my portfolio, and I'm still down with 0.25%. Now, Procter and Gamble had a RSI sell signal triggered down here. That is actually not where I bought it. I was waiting for, because it triggered it once and it went up, it went down again. Then it was triggered, so it was triggered two times, then it went up again, and it started going up, and there is where I added to Procter and Gamble, which is also trying to trigger here a buy signal on the MACD. So it has a yield of 2.51% of 2.51 dividend yield, and also its dividend X date is due in a couple of days, 5 days, as see here, and it's due on the 24th of January, which would be the next Friday. It has a payout ratio of 67.70%, which is above the normal payout ratio, but it is such a massive company. I'm going to do a separate video on Procter and Gamble. Also, their earnings are due on Monday or Tuesday, I believe. 22 there is. It's Wednesday, 22nd of January. That's Wednesday where they're going to report the earnings. So this is the only company that I opened a new position in. It's kind of a safe bet. They didn't perform that well for the past 5 years. So if I would say from here, there's the last 5 years, not that big of a jump. Over the last past 5 years, they have a 27.53% gain. So that's nothing if you would compare to the S&P. It had 80%. So what the S&P did in 1 year, Procter and Gamble did in 5 years. But let's be honest, this 80% gain in the S&P is mostly due to companies like the Magnificent Seven, which at some point or another will correct and will have a massive pullback. But Procter and Gamble will not have that massive pullback, or it will be the least of the evils. Let's just say that. Okay, now let's do an evaluation for the next week. What I think is going to happen next week in the stock market. Let's go to our risk meter here. Let's start with the S&P. The S&P ended on a positive day here. First of all, let's go to yearly diagram. So ended on Friday in plus, which is a low risk for the coming week at least. But the stock market is closed due to the presidential elections, not elections, the inauguration. On Monday also we have, it's closed on Monday due to Martin Luther King Day Jr. that is. So no trading will occur on the New York stock market. But the European market is open, and also the Japanese and the Chinese markets are open. So I will definitely see some changes here in the market. Now those changes will impact the next day. So if nothing happens on the inauguration, we're going to see a positive open. I believe there will be a positive open at least on Tuesday in the markets. Now if you take a look at the MACD, a buy signal triggered. So let's say that's a low risk for this to be reversed. Now on the RSI, we are at RSI at 55, which is also a combined with the MACD buy signal, a low risk for the markets for the next week. Let's also take a look at economic events. We have the PPI report. Whoa, that's too much. We have the US PPI report on Monday, and then we have, wait, that's the last week. We have inauguration day on Monday, could place some risk in the markets, and existing home sales then on Friday. And that's basically it for economic events. So no major economic events, and that will also be categorized as a low risk. Now, I will not take into consideration a black swan event. That is just not possible to be taken into consideration. But I see green for the next week in the market. Now, what do you think? Am I right? Am I wrong? Please leave this in the comment section below. Also, thank you for watching. Like and subscribe. Don't forget to click that notification bell in order to get notified whenever I post new videos. I'm back on Monday, and then each day when we have something interesting to report. By the way, a couple of earnings are also coming up next week. So definitely I'm going to come back. Now, with this being said, stay safe out there. Catch you next time. Bye-bye.